Hello everyone. I guess we will get started. Thank you for joining us today on the first IDC World Source Group Saving webinar. My name is John, and I am the Group Business Consultant here at IDC, and here to help with your group savings needs. We are privileged today to have Rob Grad from Manulife joining us and giving us the best offerings of Manulife and how you can leverage your network to write more business. Would you like to introduce yourself, Rob?
Sure. So hi, everyone. I'm Rob. I'm an account executive. I'm based out of our Vancouver office. I've worked in the group retirement business for over 15 years, half of that with Manulife. And in my role, I work closely with advisors like yourselves to set up new group retirement plans, and then with the rest of my Manulife team, help service them and with all their plan needs.
Amazing. Thank you. So a note here is that we will leave some time for questions throughout the session, and you can post it in the chat and we will address them in the set periods that we have. Okay. So with that, let's dive in. Now, whether you're a GB advisor or wealth advisor, it is prudent to take a holistic approach with your clients and sponsors. Group savings provide an extra stream of income for you and provides the sponsor with the opportunity to improve their employees' lives while not negatively impacting their bottom line. Nearly 80% of employees view benefits such as a retirement plan as being a key consideration when accepting a new position. However, only 50% of companies provide a retirement option. While some employers are concerned about costs and disinterest among management and employees alike, the size of the company itself may be another reason it does not offer a retirement savings vehicle. Now, this research by the ADP Institute highlighted the unique benefit of selling this product. It is underserved and highly valued, especially pointing out that smaller companies not understanding the actual costs of offering this for their employees. Now, this is where you come in and provide that insight and advice to ensure that sponsors stay competitive in the job market. For GB advisors, GRS policies should be built into every conversation. A product that is perfectly packaged with GB, but requires less time and effort on your side. No renewals on a yearly basis. It's an additional product to make you as the advisor more sticky to the client and provides better service to the sponsor by keeping them competitive in the human resource marketplace, all while increasing your revenue. For wealth advisors, take advantage of your relationship with executives and decision makers to create more value for your brand as you offer products that will benefit their business. When you bring up additional services like GR, not only does it provide an additional revenue stream, but it can also create an opportunity for further conversations about retirement planning with the members. GRS diversifies your revenue and builds resilience into your business. We here at IDC work with every registered product and every carrier. So no matter the size of the plan, what plan design, we can find the right solution for your sponsor. We offer customized support for advisors and can work with you on a case-by-case basis. Now, without further ado, I'm going to let Rob here take it away and show you how to live your best Manulife. Rob?
Great. Yep. Thanks, John. Today, we will go over a general look at group retirement. We're going to start with a review of the most common types of plans that companies offer their employees. We'll look at the advantages of the programs for both the employer, which we refer to as the sponsor of the plan, and for the employee, which we refer to as the member of the plan. And then we'll finish with a look at why you should work with Manulife for your group retirement needs. So John already mentioned a little bit about this, but I want to kind of go into this a little further. If you are already selling group benefits, why should you also sell group retirement? A major reason is to protect your existing client base. If you're not offering your clients a complete package, you're opening the door for another advisor to kind of swoop in and offer that missing solution to your clients and steal your group benefit business. What was also discussed by John is group business can be lucrative. Group retirement, if you're moving a plan from another carrier, there's upfront commissions on the transfer. There's also an ongoing stream of income on assets and contributions that are flowing into the plan. And then I believe John also mentioned this, that another reason to sell both is, if you offer both, you get access to new prospects. And I will tell you that when you sell a group, I think I saw a stat recently, it provides you 5-to-1 for other assets. That means for every dollar group that you sell, provides you the potential to generate $5 in additional business. That could mean transferring in more money for your portfolio or selling an insurance policy to one of the members of your plans. So most type of employer-sponsored retirement plans are considered a CAP, which stands for Capital Accumulation Program. This really is any employer-sponsored retirement plan that has at least 2 options, so you can sort of exclude defined benefit plans. They don't fall under this category, and is really designed to help employees save for their future, typically for retirement. So I've listed the common types of plans under this umbrella. There's registered pension plans or defined contribution pension plans. There's group registered retirement savings plans. Obviously, we refer to them as group RRSPs, deferred profit sharing plans, also coined DPSPs. Those are the main plans we see, but there are many other additional, I wouldn't know if I would say add-ons, but they're offered in conjunction with the above plans, and they're group tax-free savings accounts, group non-registered accounts, stock plans, and individual pension plans, which we also refer to as IPPs. So we'll help our clients in designing the program, but there are sort of main areas or provisions that we see in every group retirement plan. So when it comes to a CAP program, we first look at eligibility. A company can set a program to be mandatory to join, or it can be optional at the discretion of the employee. Plans can be offered to employees right away, so upon hire, or after a certain waiting time, such as finishing their probation period, or after a certain tenure of employment. And then there's the contribution formula. Some only have employer contributions. Some only have employee contributions where the company doesn't contribute. So we refer to them as voluntary plans. But I'll say, and I'm sure you've seen this before, a majority of the programs have a mixed contribution formula where both the employer and the employee contribute. So a common example would be if an employer is matching dollar for dollar up to 4% of the employee's salary. Other provisions that an employer might include or should include in their group retirement plan is, how does an employee, can an employee access contributions while employed with the company? And if they can, would there be a penalty? We don't see it a lot nowadays, but sometimes if an employer says, yeah, employees can access their funds, but they'll suspend them from the plan for a certain period of time, maybe 6 months or a year from receiving company match. More common, it's just that the company only allows withdrawals for certain circumstances, like buying their first home, so home buyers plan, going back to school, the lifelong learning program. I have seen, we definitely see pensions offer withdrawals for hardship. We don't recommend the hardship rule for other types of plans because I definitely think it's hard to manage for a company. It's hard to constitute what hardship is for somebody, right? It's different for different people. So we try to exclude that. Then we look at the investment options. In a good plan, there are a wide range of investments. Some will be managed options like target date funds or risk-adjusted investments, which we call asset allocation funds. And then most of them are a variety of funds in various asset classes that are meeting the needs of all the members of the plan and are at the discretion of the member to invest in those funds. And then every plan should have a default option That's where the funds will be directed if the employee doesn't specifically choose where to invest their contributions. And yes, that does happen. I wouldn't say a lot, but we do see that some employees, when they are enrolling in a plan, they may forget or exclude that, thinking that they're going to come back at a later point to set where they're going to for their contributions to be invested. But until then, we do have to put it somewhere, and that's why a default option, usually a balance fund or a target date, would be set as the default option. Also, we need to know, how is enrollment? Like, is enrollment online? Can members use a paper application? I will say that carriers like Manulife, we are completely paperless. So all enrollment is done online. That includes a lot of our services, such as statements. Our statements are sent online, but can be accessed by paper. There are other regulatory requirements that a company should know when administering their program, including whether their responsibilities, knowing their fiduciary responsibilities is going to be critical for an effective plan. And that includes acting in the best interest of their employees, managing their program, monitoring performance. A lot of that will be sort of guided by us and also guided by you as the advisor, but they should know of their duties of administering a group retirement program. And then the final thing on this slide are fees. So in our world, the insurance world, every fund has an IMF, an investment fee that's charged, and that's similar to what banks and mutual fund companies refer to as an MER. And then there could be admin fees, could be setup costs and things like that. I will tell you that at Manulife, we don't have setup costs. We don't have, regular admin fees. There really aren't even fees to make changes to their investments as long as it's done online or by phone. So the only fee for a member is going to be, if they withdraw the money, if they're terminated from the program or retire, then there is a processing fee. So it's also important to understand the tax treatment of contributions. So that's as it pertains to the plan member, the employee, and the sponsor, the employer of a group retirement program. And that is going to vary based on the type of plan offered. So group RSPs, registered pension plans, contributions to both are tax deductible to the employee. So obviously that means the amount contributed is deducted from the employee's taxable income. Funds for both these plans are also made from pre-tax dollars. And it's funny, I explain to people, because that's obviously different than if an employee is contributing to an investment out of their bank account, that's after tax. There is an advantage in a group retirement plan if they are contributing from pre-tax dollars. That obviously means if they're contributing through payroll deductions on a regular basis, they're only paying income tax on the remaining amount of their pay. I kind of refer to this as a kind of getting a tax refund with every pay instead of waiting until the end of the year. And it's the opposite of tax-free savings accounts and non-registered plans, because those contributions are made with after-tax dollars. Members still like these plans because they're an additional source of savings, investments that are outside of a member's group retirement or pension account. On the sponsor side, contributions are made by employers to an employee group RSP or pension plan are also tax deductible. So this time it's for the employer as a business expense. And then there are DPSP and registered pension plans. They're additional benefit because theoretically, when you look at, let's say, a deferred profit sharing plan, theoretically is coming out of profits, right? So this means that both a registered pension plan and a DPSP, employer contributions are not attracting payroll taxes like CPP, EI, workers' comp. Can be a significant savings, sometimes up to 10% for employers. And then the last thing is talking about whether contributions are locked in or vested. Really in today, and definitely in certain provinces like BC, pensions don't even have a vesting period. The only type of group retirement plan today that has a vesting period would be a DPSP. And for anyone who doesn't know or isn't familiar what vesting is, it refers to the process where the employee earns the right to retain the employer contributed contributions in the account even after they leave the company. So in a group RSP, funds vest immediately as soon as it hits their account. But for a DPSP, this is set by an employer, and sometimes it's set by the type of product that the DPSP is in. But for the most part, vesting schedules set by employer up to a maximum of 2 years here in Canada, and determines how long that the employee stays with the company before that they actually own those employer contributions. And then finally, the locked in, only a pension has money that's locked in. The money can't be accessed until the member reaches the age of retirement. So the question now is, what's in it for the employer if they don't currently offer a group retirement plan? And I can say, because I see this all the time, employees are definitely, influenced by the availability of this type of plan. There was a study recently that showed, and I think John mentioned something similar to this, that 1/3 of respondents indicated that the presence of a company-sponsored plan positively influenced their decision either to join their current employer or to stay with them. So it is definitely something that is highly valued by employees. And also, we did talk about the tax benefits. I wouldn't say that it's a determining factor for an employer to set up a plan, but it's definitely a sweetener, right? To have contributions tax deductible or made with pre-tax dollars. But the one thing I do want to mention, it's the last one on the slide, is companies like predictability, right? Definitely when it comes to costs, they want to know, when a company offers a plan to staff, they want to know, what is that cost, whether it's a fixed dollar per employee. Is it a percentage of employee salary up to an annual maximum? It's quantifiable, it's known, and it allows the employer to sort of budget dollars year after year toward that benefit. Another advantage, again, I think John mentioned it, that it's all about, attracting, retaining. It really is, making the employer, the employer a company of choice, a more desirable place to work. So if they offer an attractive benefit package that includes a company retirement plan, that's going to let them sort of stand out in a crowded job market, because all these companies are going after the same employees, right? The high quality, talented professionals. And if they're lucky enough to get multiple job offers, you want, or at least the client wants, to have sort of theirs favored in a strong group retirement plan can be the deciding factor. It also, having a group retirement program, leads to a stronger workforce, because if you are attracting the best people, that helps the culture, right? Hopefully those employees are staying long term, and if they are, employee turnover is reduced, and overall that should lead to a better bottom line and increased productivity. So there's also how a group retirement program increases the employee's level of financial wellness. Now, I know that some of you may have heard that term. It is sort of thrown a lot nowadays. We have studies on it that we talk about it year after year, but it refers to sort of the state of having a healthy and balanced financial life. So when you look at how a group retirement plan can help, it really shows the company that they care about their staff. They care about their employees' well-being, not just today, but in the future. Shows that they are a caring, responsible employer. It builds that trust between staff and management. And it also, it builds a more positive culture, because if somebody, wants to work in a company, they want to work there long term, they feel engaged, motivated, valued, that's going to lead to higher productivity, which is what your clients want. And it creates a workplace where employees want to stay long term. So on the flip side, what's in it for the employee? We talked a little bit already about the immediate tax savings when contributions by an employee to a group retirement plan is deducted from an employee's gross pay. Also, as other registered plans, the funds contributed, they grow tax sheltered until that they are withdrawn at retirement. But I'll say the next one is probably the biggest one, right? If the company is contributing, doesn't always have to be a full-on a match, but if there is an employee contribution, it's like receiving free money, right? It motivates staff to join. It helps members feel engaged, and really it helps them accelerate their savings goal toward their retirement. And the last thing, last benefit is it helps them get ready for retirement and be more financially secure, because I think we're all the same is, a financial worry can be distracting. So employers don't want that. They want to provide, like a group retirement program that can alleviate some of those concerns and allow employees to focus more on their job. And then we understand now, what's in it for you, what's in it for the employer, for the employee. But it's easier said than done, right? It's to try to find these opportunities. And sometimes those prospective clients can be closer than you think, right? They could be on your portfolio. You've got a portfolio of high wealth clients. They could be a business owner or a senior manager of a company. If you have a group benefit portfolio, obviously that's a great place to be looking at your existing clients. Where are they doing their group retirement, or do they have a group retirement plan? The question to me is always, what size of plan or what industry should I be focusing in? And I will tell you, the honest truth is all, right? They're all good opportunities because it all fills the same need. Whether you're dealing with a tech business, manufacturing company, law firm, or even a doctor's office, they all need it. But every organization is different. So understanding the uniqueness of the company, their employees, obviously that's going to be important. And that's where, my team comes in. We're going to help, obviously, in the designing of the retirement plan, the support of the plan members. And, you have options and different carriers. And so my job is obviously to tell you why Manulife would be the best opportunity or the best partner to work with. And that's where I'll lead next. But before I do, John, do we take questions now or do we wait until the end?
I don't see any questions in the chat. So if anyone has anything that they feel urgently needing to be answered, then you can shoot them now and we will address them. But otherwise, we can wait till the end.
Perfect. Okay, John, you can see my screen still?
Yep. Yep.
Okay. All right. So I'm not going to get into too much detail about our organization. I will say that when it comes to our Canadian group retirement team that I'm part of, we are considered a market leader. But the one thing that I do always talk about is our retention numbers, because, virtually every employee that we work with, they choose us for long term. So we are committed to working and making sure that that client is satisfied and their plan needs are being met. I'm not going to go through any of our demos just because of time constraints, but I will say that if at in a future, if you have like a meeting with a client and you want to go through some of these demos, feel free to reach out to me. But for now, I want to do a general overview and what I call the employee or member experience or member journey, because we really are there to help the plan members of the program from the time that they start the plan and learn about their program to the time that they leave the program or retire, and even longer. I mean, a plan member can stay working with you and working with Manulife even after that they're terminated from the program. So if we start at the beginning, when an employee is eligible for a plan, the company will send them the link to our enrollment hub. The enrollment hub tells the employee everything they need to know about their program, how it works, the plan provisions, the funds that they can invest in, the support, who they can call if they are having issues with enrollment. And then there is a button that says ready to join. So once they've learned about their program, they click ready to join and it takes them to the enrollment process. Takes about 10 minutes to go from beginning to end. The beginning would actually be setting up their Manulife ID. Now, there might be people on the line that actually have heard of Manulife ID because it is what we call a single sign-on for this and other lines of business with Manulife. So if an employee has a group benefits plan with us, or if they have their investments, an insurance policy, they have access to those different lines of service with one Manulife ID. But if they don't have one, the first thing that they're going to want to do is set that up. They go through the step-by-step process of enrolling in their plan. And once they do, they're able to manage their account online using the member portal. The member portal, you're able to check your savings, your progress, make changes to your investments, be able to get access to their statements, and also access to financial advice. I will mention a little bit about a service that we have that's free of charge for clients. Is called PlanRate. That if you don't want to fully provide advice to every plan member because you've got a business to attend to, and also do you really want to be working with employees that have account sizes of, let's say, $5,000? You'd rather have us provide that information. I will talk a little about what PlanRate is and why it's a benefit to you and the client. So a couple other things that we have to sort of engage the employee to get them interested in learning more about savings and more about their financial future is we have something called Steps retirement tool. And employees will use this. They'll use this to identify their retirement lifestyle that they want to have, and it also helps them determine how much they need to contribute now in order to reach that desired retirement income. And it's probably about 15 minutes, 3 steps. So it really helps them put together a mini financial plan. We also have our mobile app. We actually it's rated one of the best in the marketplace, and it is something that is used for both our group benefit and group retirement members. So if you have a client that already has group benefits with us, that same mobile app, if they added a group retirement plan, would be used for both portals. And as you can see from the slide, you're able to do a lot of the same things on your smartphone or your mobile app than you would be as a plan member would be on on the member portal. They can look at their investments, how it's doing, make lump sum contributions, use some of the planning calculators, and again, access advice if needed. On the sponsor side, we've got our sponsor site. Again, won't be going through a demo at the moment, but it does. This is where the employer will be remitting their contributions, so they'd be either using an employee listing or uploading a file to make remittances of the plan. It's also used to help with enrollment if employees are having a tough time with the online enrollment. Also helps with terminating an employee if somebody has left the company. And when it comes to the investment platform, we do have two platforms. I'm not going to go into details on what the two are, but Future Step, which is for our smaller clients, has a set fund lineup. But with our regular, or what we call our Grow platform, we do have over 200 funds that an employer can choose from. Obviously, with your help, they're going to whittle it down to a more manageable, maybe 15 or 20 options. That can include, our target date option. I actually really like our ESG funds. We've got our climate action fund that the performance has been amazing and very popular for some clients, and our Sharia fund. So it is something that we can help you and help a client put together, but we've got various funds to make it a well-rounded fund lineup. Other than that, I think that I would end really by looking at our platform with the three things that are listed on the slide. We are one of the only providers that offers the free advice from PlanRight. We have that provides access to plan members, that offers them ongoing advice at no charge from a salary-based employee of Manulife. They also have ongoing education. Actually, you know what? I'm sorry, I didn't actually talk about our education. Let me bring that up right here. When it comes to our education, I think it is important that we discuss the different ways that we're able to do that. We do offer it on an ongoing basis just to the group. So that could be in person or virtually. But we also have our webinar series that is ongoing on a variety of topics. And you'll see that it's offered, like right now, the featured webinar is Taking the Stress Out of Money. And what I really like about our webinar series is some of them are offered on in outside of work hours. So evenings, weekends, like this one is. So you can see it's offered on Saturday morning, which of course, well, it's 12 p.m. Eastern, but 9 a.m. out of BC. There's also ones that are in the evenings. And this is to make sure that if an employee wants their spouse to join, that they can at a time that accommodates them both. And as you can see, there are a lot of other webinars that are available and times are added throughout the year. So I think I will probably stop there. John, any questions that have come up?
Yeah. So someone just asked, David here asked, are seg funds available on the plan?
Well, that is our platform. So we do have seg. That is our platform. We are a seg platform, and the reason that's a good question, is because with a seg platform, there are certain things that help advisors. Like, there isn't a need with a seg platform to do KYCs, right? So that leads you don't have to have the ongoing support having to do KYC renewals every year. I will say though that our seg platform is really in name because it doesn't have the maturity or the performance what do you call it, guarantees that other segs have. So it's more in, I guess you could say, in name, but it also allows that the fees are a lot lower than other segs that advisors might be have dealt with in the past.
Okay, so we got another question here from Trina. Is there a minimum contributions required per year?
So another good question. So we didn't really talk about our two platforms, but our platform for smaller clients is called Future Step, and the minimum annual contribution to those plans to a RSP in the Future Step is $10,000. So that is usually quite manageable for a small client. Like if you have a small business or even a doctor's office of 3 or 4 employees, $10,000 a year in annual contributions is pretty achievable. When it comes to our regular platform, we do ask for a little higher. So you're usually looking at more like closer to 150,000 in annual contributions. But when you look at, that's probably about 20 to 30, the minimum employees. That's probably about the minimums for the two.
Thank you. And then we got a question from Tsai. How is the compensation structure at work for group retirement plans?
Another good question. So compensation, again, will depend on the two platforms. Future Step has a set compensation. So there is no wiggle room. The compensation has a comp on transfers. I'm trying to remember what it is. I think it's 1.5% on transfers. It also starts with 1.5% on cash flow, but then over the first few years, that cash flow compensation lowers as they introduce a trailer on assets. So that is set. Now, one of the benefits of our regular platform on Grow, if the plan is of a sizable nature, that the advisor can actually structure the comp the way they want. Now, obviously, any compensation that an advisor puts in there impacts the fee, but some advisors prefer a higher trailer than others, and that of course will depend on the base or the how much is in the plan and so forth. So one is set, Future Step, and one can be accommodated or at the discretion of the advisor, and that's something that I can help with when an advisor contacts me.
You, Sad, is that, did you feel like that was sufficient for your question?
The main thing to remember about compensation is you'll be compensated in 3 ways: transfers, on assets, and contributions.
Okay. I don't. Oh, yeah. Yeah. Okay, great. I'm glad that we were able to answer your questions. So I don't see any other questions currently. Well, thank you, Rob, for answering all of those. We'll give them a few minutes to see if there's any additional questions or if there are anything else that people wanted to ask or talk about. Now, otherwise, my contact information is up on the screen. There's a QR code as well, so you can book through Calendly so that we can have a quick consultation. We can chat, see how we can serve your business. But in the meantime, thank you all for attending today's webinar. I hope you found it insightful and contributed to the growth of your business. IDC is here to help. Please don't hesitate to reach out to us, and we can talk about next steps to grow your GRS book. And of course, we look forward to working with all of you. Now, currently, there's still no questions, so I think we will give everybody a extra 15 minutes back. Thank you, Rob, today for helping us out. Information.
Thanks,
It's really
everyone.
great to see you.
I know.
Take care, guys.